Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight the markets were rather whipsawed as the US dollar, which measures the greenback strength against a basket of 6 major currencies, rebounded from 101.80 and posts a fresh high of 102.72 before pulling back to 102.50. In economic data, the Institute for Supply Management Manufacturing, which is the PMI, a closely followed index of the US-based manufacturing activity, rose to 56.1% in May from 55.4% in the prior month. The research group said missing the forecast of a decline of 54.5%. However, it is viewed that the data is somewhat mixed and isn't likely to push the US Federal Reserve off track from its aggressive interest rate hiking cycle aimed to taming runaway inflation. So from the posted topside rejection for the Australian dollar, we've got a gravestone doji in place and the market now looks towards 71.45. If we see a break there, could see a further decline down towards 70.90. However, there is a couple of things that are in favour for the Australian dollar to rebound, and one is the ADX is still holding to a modest trend to the bull case. However, the RSI is a little bit buckled, but keep an eye on this midway point, because if we do see a rejection from the midway or from around 71.45 to 70.90, then we could see another upside test after the recent rejection close to 72.60.65, which is the 60-day moving average. The disappointment for euro is coming in a little bit more to the downside, that is, as the dollar rallies. The euro has taken out the support level 106.80 and now looks towards this level of 106.25.35. A break there would give further indication that the bulls have pretty much abandoned the upside challenge and now sees a decline to 105.60.65. Moving on to dollar yen, the market still maintains a somewhat bullish stance since rebounding off around that 127 level. The market is now looking to that challenge around 130 figure 15. Even though we did see a brief challenge at 23, the market wasn't there for that long of a period. And therefore, let's see if we can see a pullback. With the immediate support seen around 129.45, the market may actually weaken further if we see a break there. We are overbought and the MACD not fully conclusive to support a bullish case as of yet. Sterling was weaker as well due to the US dollar strength and now tumbles further as the market takes out the level of 125.30 and now looks towards 124.65. If we see a break there, that would give further indication that the market may actually tumble all the way back to around 123.5. So do keep an eye on that level, that is at 124.65. The market was also weaker for sterling Kiwi as it tackles that level of 192.5. With a bearish outside range day in play, I feel the market still has room to reach the shores of 192 figure 30 and reassess. Was a very whipsaw price action for gold as it challenges the 1,838 level but was rejected. However, keep an eye on that RSI because the market hasn't quite fulfilled the upside strength. That is, the candle may have, but the RSI has not, as it remains under the midway point. This in terms may see a further weaker play and look back towards the downside and look down towards the 1,829 level, that is, and reassess from there because we did get a brief challenge but was rejected. From the key reversal, the market has posted further weakness and confirmed the signal, that is, the candlestick that was representing the bearish case after taking 113 out. Since then, the market's plunged all the way to the lows that we see at the moment from today at 110.45. So a pretty significant move from the break of 113 and also from the rejection from that key level, which was around 118.50.70. As we're on track, now looks towards 106.20.70 as a potential target, with the RSI remaining somewhat heavy. Let's see if the MACD can marry up. Well, that's the wrap for the morning. Thank you very much for joining me. As always, look out for the intraday report and also the end of the day wrap.